Traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York. It is Monday, 17th day of August 2015, and this is the daily report for gold and silver. We do have the precious metals moderately higher on the day, with gold trading up approximately $4.30. That's COMEX trading roughly at $11.17 per ounce. We've seen it trade as low as $11.1290 and as high as $11.22. When we look at spot or Forex gold, similar action, up about $3, $11.1776, the low $13.97, the high $22.85. Of course, we do have a long position in the market right now. We have an OCO to get us out at 28. Obviously, that was not hit. We've moved our stops up to just below 11.02. Also, that's not been hit, so we are looking at an active trade this morning. Over to silver. Silver is trading up nicely, roughly trading at 15.30 and a half. We've seen it trade as low as 15.18 and as high as 15.37. We'll touch on silver in a little bit. So traders, I do want to start today's show off by looking at our half-a-day chart. Of course, this chart is just in Japanese average format. Let me get these candle sizes a little bit larger in terms of the bodies. And the one thing that we can see is we do have our stop. We've raised that stop at this point to just below 11.02. And that really gives us this coverage here. And really what we're looking at when we're looking at this particular point in terms of support is that it was just prior to that resistance. You can see these tops in here, and that's why that number makes sense. It's a century mark. Now, in terms of our exit strategy, we currently have an order in at 28. Now, that is based upon that there should be a little bit of, call it a potential ceiling or resistance roughly at 11.32. That's that 38% retracement level. However, what we've actually seen moving into the market is a little bit of, call it resistance, but this resistance is about 11.20. Now, you can see we've had highs over this point on a couple of occasions, but we've not had any real bodies, meaning we haven't had any closes above that point. Now, that, of course, is looking at this through a Japanese average chart. Now, all I've done is converted our Japanese average chart, of course, into a standard candlestick chart. Let's go ahead and get those real bodies in a little bit better. When we do that, you basically get the same thing, and that is that when we look at this one area of about 11.20, we can see that there's genuinely been a little bit of resistance. So what does that mean in the big picture? My sense is that we have made our first clip up. We're in a short period of consolidation, and that's the point we'll see if the market can actually go and break above this current resistance at about 11.20, and whether it has the power or strength to make it up around the 11.32 area. That is our basic assumption. That is our basic strategy, and that's why we have put together our game plan with those specific parameters. So traders, yet another way to take a look at our current levels of support and resistance is this daily chart that I pulled up. And from last week, you recall, because we started looking at this chart last week when we added this last set of fib retracements, which is basically from this most recent high, roughly at around 25, and to the low, so we could chart different areas here. And if you look at this 23% retracement level, this is at 11.13. We can definitely see that I believe that this is our new tentative support level. Short term, we certainly still have resistance right in here, which is roughly at 25.26. But I would expect with this nice rise today, as I said, for it at least to attempt on a second occasion to take this price point out. Now, traders, I am looking at the potential for this market to move higher and possibly beyond this 11.34. The real question we've got to ask ourselves is whether or not we've seen any kind of sizable retracement or correction, whether or not we can expect to see that. For right now, my suggestion is maintain your current long position, maintain your stop, also maintain our OCO at 28, and let's see what happens in trading and its price point over the next couple of days. So traders, what about silver? Well, as you know, I have been sidelined On the majority of our trades that I went long or short in gold, we didn't do anything with silver. That changed on this last trade, and we did take a stab at the market. We're long roughly in this area. I think we're long at around 25 or 26. Market's trading at 29. So we have a couple of cents, but it's basically in that same area that we bought in our position at. Now, what's interesting is during that same time, we've seen gold move up and move up substantially in terms of percentage gain. It is actually outperforming silver. Also, we kept our stop when we moved our stop up in gold. We did not in silver. I talked about the fact that a lot of that has to do with the volatility of the market. And so what I'm looking at is as follows. And to illustrate it best is I pulled up this daily chart. When we look at this daily chart, first of all, our MACD looks good. We've got strong moving averages. We've gotten our cross right down here. We've got the momentum on our side. That looks good. When we look at our linear channels, we have an absolute bias to the upside. There's no doubt. The one thing we are seeing is it seems to be trading to the top of this channel and then moving down rather than breaking above a channel, which is what we genuinely like to see in a breakout. I do believe that there's opportunity on this silver trade. We are going to maintain our current position, but I do want to maintain that stop because of the increased volatility and price range that you can get. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for another daily update review. Bye-bye.